So good morning, active traders, and happy Saturday. I hope that you're having a sizzling hot, profitable summer. I'm Ken Calhoun, your host, with another broadcast episode of Trading Week Ahead, serving the world's active trading community since 1999. We are up to a full whopping 5,423 of you have registered for these events. So thanks for making them number one in the whole frickin' industry. Let's go ahead and jump into it. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold, and by watching this, you agree to not make actual trades. It's all for learning, preferably in a demo account. Just like in martial arts, before you use the steel katana sword, use the wooden practice sword called the bokken, or more accurately, bokuto. Paper trade before you play real money. You have no business trading live accounts until you can at least double a paper trading account. That's my humble opinion. And I would urge you to, or at least consider trade smaller size if you're struggling. If your trading losses make you or your family say, what the heck? For example, you lost my college tuition on penny stocks. What were you thinking? Bad daddy. You know, if you conceal your trading losses from your family, there's probably something wrong. You know who you are. Stop the madness. There's got to be a better way. Your goal is to make as much money as possible with your winning trades. My goal is to get you there sooner rather than later. Okay? Our quote of the week from one of my favorite military folks in history, Sun Tzu: quickness is the essence of the war, and quickness is also the essence of successful professional trades. More importantly is quickness to exit rather than quickness to enter. You guys are so worried about getting in and not missing the big run. Fear of missing out, FOMO. That should not be your concern. Your bigger concern should be how to get out if the trade's going against you intelligently, quickly, with as little cheap as a stop loss as you can. Our trade management tip of the week, part 4, always add to your winning trades. Always scale into your winners. I've got 2 more slightly more useful tips coming up exclusively for my Swing Scans members. So if you're not yet a Swing Scans member, do try it out. It's only $7 for 3 weeks. See why hundreds of traders around the world have joined, and it's popular for a good reason. So join Swing Scans. Anyway, let's get on with it. Get on with it, Calhoun. What's going on? Our S&P had a bad day yesterday. It fell off the cliff, right? Boom. Dead cat bounce. We don't really care about that. We care about what's next on the right side of the chart. My R1 trigger, resistance 1 trigger, we wanted to get above this value before we go long, is 28.53. I always take notes. 28.53 is our long trigger. So stay clear of the market. At least I'm going to stay clear of at least adding in or initiating new trades unless the S&P is able to climb up out of the muck and get over 28.53. Our S1 trigger, the short trigger, is 27.94. And that's just right under the most recent several days price action. If we get under this 2800 mark, especially in our 2794, we may well be good all the way down to the 50 SMA at 2760. So it may run down here and bounce. So 2794 is the S1 trigger for our S&P. All right, now let's take a look at a couple of hot charts. First up to bat I wanted to give you is TSM. And on the 90-day chart, you can see this guy ran from 35 to 41, just under 42. We take a close-up look. This is one that's a pick of the week, one of the picks for my Swing Scans members. I also gave it to them earlier. Congratulations if you capitalized on my winning alerts in TSM earlier. It did a gap continuation, and it ran all the way to just under the 42 whole number. You can see reversal if you look really carefully. If you break out the frickin' magnifying glass and take a look, you can see we've got resistance with a shooting star right there, a bearish reversal shooting star right under the 42 whole number. So for that reason, I'm going to wait till it gets over 42 before I trade this in my own capital trading accounts. And so you may want to pay attention to that tip. Let me ask a quick question. Let's say you went long this chart, or let's say you bought calls or sold puts in your options trades or whatever. Where would you trail a stop to lock in a profit? This is the 15-day candlestick chart. This is the part where you type in an answer. Where would you trail a stop to lock in a profit? Let's say you bought the gap up, which is always a good idea. It's the 40.5 or something. You got in over the 40. Or let's say you bought it earlier on an earlier alert, say 37, 38, and now it's up to 42. Where would you trail a stop? I'm a big fan of whole numbers. We don't have much time here, so 40 would be the absolute loosest stop. A professional exit that I would use would be 41. One quick tip, so if we let's say 40.8 would be my official where I would get out of the trade, because that's the price that proves a breakout wrong, right? There is previous resistance. You may have seen my articles in technical analysis, my award-winning articles in technical analysis of Stocks and Commodities magazine, where I have the monthly Trading on Momentum column, and I cover strategies, and I urge you to look at those strategies. It's always smart to give some thought to how do you manage the exit. How do you manage, after you're in a winning trade, and let's say you're up 800 or $1,000, how do you manage the exit and lock in a profit before the market takes it back from you? And in this market particularly, I found it's important to do a kind of a squeeze exit. Something runs up in your favor, and the first sign of trouble, sell it all, because you can always rebuy above a new high. Right? That's how I trade. It's a good professional trader's approach. And always sell, for example. You may have seen my article in Stocks and Commodities on this. My whole number trading approach is one in which I teach traders at my TradingTheOpen.com live room. I'll often have them go long at, say, the 20 or 30 cent mark above a whole number, then sell the 80 or 90 cent mark right under the nearest whole number. And that's for an intraday trade. Because you can always rebuy if it gets over 42.20 later, which it didn't. So that was a good round trip type of an approach. Look at the intelligence of this approach. It's got a small gap up, which is one of my favorite patterns. We go long at the 20 or 30 cent mark above the whole number, and we sell the 80 cent or 90 cent mark if it gets there. But usually 80 cents is good enough to go for a day trade. So remember that. I put an article in Stocks and Commodities. People rip off my trading strategies all the time. I'm the most widely ripped off guy in the industry. People copied my university site idea. They copied my tape reading ideas. They copy. So I document a lot of my strategies in a public forum, the Stocks and Commodities magazine, to help the world's traders, and also to have a record so you guys can learn who taught you guys that strategy first. But anyway, trade within the whole numbers. Buy above the slight whole numbers, sell into resistance at the 80 cent mark is a good exit place I'm finding lately, by the way, for the current whole number breakout. So TSM, what a rock star chart that one is. For those who like cheap stocks, VRAY had been on quite the run lately. This is one that I called for my small cap scans members the last couple weeks in a row. Congratulations if you too cashed in on that chart. Boom, flawless victory. He shoots, he scores, the crowd goes wild. But yet, the thinking is, what do you guys think? Is this likely to, A, keep running on up sharply, or B, drop and chop? And therefore, what should you do as a trader? If you're long 1,000 shares from 8 or 8.5, or wherever I called it long, and it's up to 12, you're up 3 points on a $10 frickin' stock. Now would be a smart time to sell it all, in my humble opinion. You can always rebuy a new high somewhere north of 1340, 1350 in the unlikely event it keeps running up. But at the first large red candle, that's a good exit strategy. So if you're in long from a breakout, you know, some of my biggest winning trades, and you can look at them documented on my TradingTalk.com forum with over 100,000 views on my Real Money Trade screen caps, my interactive brokers and Fidelity accounts, as recent as this year. For those of you who are wondering, you can go see some from earlier this year, some real trades I did. Some of my biggest real money winning trades over the years have always been selling gaps up that then start to drop. Okay, often small gaps will usually continue. Large gaps like this guy will often drop and chop. So take the money out of the trade, lock in your profit, and then reset a new entry. You know, if you're worried about it running up without you, which I always am because I pick outstanding charts, that's what I do for a living. That's what I do for a living, is pick outstanding charts for the world, myself and all my traders. You can always rebuy a new high, lock and load, engage up here somewhere. But in the meantime, it's a good time to take the money and run, all right? Anyway, that's a good chart to keep on the radar in case it takes out new highs. Really good high velocity chart. Really horrible chart is Facebook, right? That's a gap down that I wouldn't touch with the 10-foot pole. That's a stinky chart. Boo. It's not even doing a dead cat bounce. Not doing that. It's not barking up to new highs. Earliest I'd wait is somewhere north of 182, 184 maybe for a bounce long. I think it's more likely to go down. A loss of 170 might make for an intelligent short. Remember I said that? I'll remind you. But anyway, that's a really bad gap down. Nice, well-mannered uptrend. And then all of a sudden, boom, bang, bang. Keeps going down. So the end may not be finished yet. So that's a stinky chart you would not want to trade to the long side anytime soon unless it breaks out way up here for a mean reversion pivot. But that's unlikely. The more likely thing on this chart is a sell-off continuation. Right? Now a bounce that I nailed for everybody on Friday, for those of you who got my email, I had 3 winning live real alerts in a row for you guys on Friday's bounce in Skechers. Skechers got stepped on, bada bing. A little inside humor there. Skechers, it's a shoe company. Got stepped on, boom. But it started to bounce, and I called it long 3 times in a row, winning for my traders on Friday. I did a free, spontaneous open house for everybody. But now it's starting to look bearish. We've got a bearish upper shadow. We've got a shooting star type pattern here. We're getting close to a 50 simple moving average. It's already filled over a mean reversion pivot. Remember, a mean reverting pivot is something that runs down, either runs down on straight price action or gaps down, fills about half the range, and continues to then cycle downwards, right? So we're right slightly above the mean reverting pivot zone, which is why we have a bearish upper shadow, and it's also at a $9 price, which is a good place to sell, not to buy. So for that reason, I'm not going to buy Skechers. I'd be looking for a short somewhere south of 27 or so. Right? Mean reversion, pivot. It's still going up, so it's still buyers in charge, but if it loses 27, that would be an intelligent place to go short in this chart. Are you with me? Does everyone understand that? Resuming the initial trend, which was down, it filled it on a short squeeze, but it may well continue on down. Next up to bat, let's take a look at our broad market and what's going on with our sectors. At least I only have time to cover oil and gold, so gold is down, right? Barrick, Newmont, Nugget, GDX. So for that reason, we should be looking for longs in the inverse gold instrument called DUST, D-U-S-T. And you can see a recovery here from 22 all the way up to 20, almost 28, right? So if DUST climbs north of 28, this is how you play gold short. When the price of gold tanks, like it's been going down the last couple weeks, the inverse ETN DUST goes up. And so for that reason, DUST for long play might make sense. I don't see any especially strong plays in the oil sector. If we look at the oil instruments like UCO and USO, they're indeterminate, kind of little pivots off of a sell-off. I'm not going to trade oil next week. I will be trading, however, the inverse ETFs if they bounce. One of my favorites is VXX. See, here's the S&P. It goes up when the stock market goes down. Here's the S&P. Almost an exact mirror image is going to be your VXX, your UVXY, your TVIX, your TZA. That's a good chart for a cheapie. TZA, what a chart. Again, if you don't know how to capitalize or trade on the inverse or bear ETFs, be sure to get my course, How to Trade the Short ETFs, and tradingshortetfs.com I believe is the URL. But anyway, it's one of my downloadable courses. Look for plays in instruments that are the inverse of the stock market if the market continues to drop. What I like about that is a large green candle recovering slightly. Does everyone see how it's poking its head right over the 50 simple moving average? that's a long trigger for institutional traders. Any recovery over a 50, a 100, or a 200 simple moving average is a professional trader's buy signal. So especially on high volume. Notice how this is like, what, a month high volume? Volume had been down here, volume spike, large green candle. It's alive. So if the stock market sells off, continues to sell off like it did yesterday, the inverses will go up. And of course we cover those in the live trading the open room, and we'll cover these in the swing scans. We are going to cover those in swing scans coming up next as well with the specific triggers. So anyway, some good reversal plays as well as breakout continuations in the house for the smart traders in our active trading community. What else do we have? For our Forex traders, to be honest, none of the Forex charts are very good this week. None. So it's more a scalpers, day trading FX market than it is a trend swing traders market. This one is our Euro Yen, and it's been going down continuously. Maybe good for new short down here, but I'm also looking for this for a bounce recovery because of how far it's gone down. We got a little whipsaw here. It's still sellers in charge, so the short down there makes sense, but this is one that I'm looking at for a potential pivot for a mean reverting bounce at some point, and this is the Euro Yen. But I don't see any charts that look like that to the upside in the currency markets. Mostly everything's been kind of choppy. This is the cleanest chart in the currency in the Forex world, is the Euro Yen. So for those of you who are Forex traders, you might want to look at that one for a potential pivot. But big picture, I'd take a pass on most Forex charts unless you're scalping them for intraday. That's still fine. If you're trading out of the opens and the closes, the 3 open and close windows in the markets, that's fine. But play it safe. Play it safe out there. All right, we got just a few minutes. And again, thanks to all of you for being here. We got a really big turnout. No big sales pitch. I just want to give you something as a thank you for doing my survey. If you would, in the survey link, let me post that for you guys here again, because we got a lot of new folks who've just been logging in, so welcome aboard. If you do this survey, and it's anonymous, so it doesn't ask for your name or any of that kind of stuff, but you do this quick one-page survey, it's basically to ask you to evaluate my Trade Mastery website. See, the challenge is I got so many new subscribers and members from around the world, and I got a lot of new versus experienced traders, traders from other countries, and subscription rates are at a 3-year high now. So my company is doing outstanding, and I need to meet the needs of growth. It's one of those growing business challenges, and so I need to make my website easier to use and easier to understand. Right now, my company's always been kind of a boutique for intermediate or advanced traders, but as we reach more newer traders, you know, and folks who may be retired and or folks who are not as computer savvy or whatnot, I need to make everything simpler and easier to use, and I get it. So help me with that, and I'll pay you back by giving you a free, no pitch, honest, good, honest, specific, how to turn around and fix your trading webinar this upcoming Wednesday. And if you can't make it or you don't want to show up, you still get the downloadable high-resolution video of the entire event captured for you to keep forever on your hard drive. So, in high resolution, so you will be able to learn from that coming up. See, we are about out of time, folks. So do take this survey. Just take a look at the Trade Mastery site. Give me, at least fill out a couple of the blank spots and tell me what you would improve about it. And I'll pay you back by giving you a free webinar Wednesday. I'm going to turn that into a for-pay webinar because it'll be worth it, at least $47 or $67 for in the future. But you guys can get it free before it becomes a pay event just by doing the survey for me. So help me help you, right? I always try and ask. It's like they say in life, you got twice as many ears as mouths, so you should listen twice as much as you talk. And as any smart business owner knows, you should be always have your finger on the pulse of the market and ask your customers, how can you be a better service to them? And that's what I'm always doing for you guys. So I appreciate your patience with my surveys that I do every few months. It's always a good way to get you free content as a thank you, and also a good way for me to look for new ideas, because you guys give me some amazing ideas for thoughts. So anyway, I think we're going to wrap. We're just about out of time. We're at the 20-minute mark. I've got swing scans coming up, so if you're not yet a Swing Scans member, join or rejoin as the case may be. And I'll see you guys next time. So take care. Best wishes. I'm sorry I can't answer all the questions. I got too many people here in only 20 minutes. But I do answer questions very thoughtfully, very in-depth, very respectfully, very professionally, very honestly, based on real money trade experience for my members and my members events, because I don't have hundreds and hundreds and hundreds. Much as I like, I don't have 5,000 members of Swing Scans yet. We're working on it. So do join. And until next time, trade with passion, trade with intelligence, trade with really tight stops, and let's go get them. Take care and best wishes for success.